Okay, well, hello and welcome to our daily market review and analysis. We've missed a couple of sessions where we should have covered the Canadian pairs and yen pairs over the last couple of days, and today we are doing US dollar pairs. So one of the reasons why I didn't cover them is unfortunately the market has been very mixed and almost impossible to try and get a handle on it. And in fact, in the last couple of days, as you know, it has been volatile, but really not gone very far. So there was no real major change at all. So what I intend to do is to briefly go over the US dollar pairs today, and then over the weekend I will try and do one thorough recording, which I will then subsequently post. And in that one I will try and take the wider market with a view of getting a handle on it for the coming week. So today we will mostly try and explain my reasoning behind the view that I have for the dollar index in particular. And also normally we try and follow or carry out the intermarket analysis, where we look at the equity index and oil as a representative of market, which could sometimes give us direction for the forex market. And then recently that has changed somewhat. As you've been noticing now for quite a few days, we've been finding that both the dollar index and equity markets seem to continue to go higher. So what I'm going to do is going to share one chart that I have prepared to highlight the problem. So in this particular chart you will see and in fact the only thing we are trying to get from here is a general concept, not really trying to pinpoint any particular level, but just general concept. And the general concept is that at the bottom we have a dollar index, and at the top we have Dow Jones Industrial 30, and this one is RSI. So if I just squeeze the RSI in for the time being, then you see that there are various points, and some of them I have tried to highlight by these vertical dotted red lines. And what we are trying to note in here is, for example, from this period here, you see Dow Jones Industrial went up, and broadly speaking dollar index went down, which is a normal relationship, simply because things are measured in dollars. So equity market is measured in dollars. So if we have a situation where the dollar is declining, then that would suggest that anything measured in dollars would tend to go up in dollar nominal terms. So during this part we had that. Then we have a short period here where it looks like both the dollar index came down and equity came down. And then sometimes at a major pivotal point we find sometimes one market, like a dollar index or equity index, turn first and the other one then follow. So in this particular case we had a situation where dollar index bottomed first and the equity market continued going higher, and then subsequently the dollar index started running up fast and the equity market from there started running down. So that was a normal relationship. But just here we had dollar index bottom first and the equity market top out afterward. So there's no rule to say which one will be first and which one will follow. But in this case it was a dollar index that was following first and the equity market then followed. Then from this point again we had a normal relationship. We had equity go up, dollar come down. And then we had a short mixed period here where equity, broadly speaking, went down, up and down, but more or less sideways, whereas the dollar made a strong rally during that period. And then we had again a normal period where we had, broadly speaking, dollar index, equity index going up, dollar index coming down. But since this period here, we have a situation where dollar index in the main has continued up, with the exception of this short period here, continued up, and we've got equity market generally continue up with a small retracement in between. Then from this point we had, in fact over here, we had dollar index weaken, equity index went up, dollar index went sideways, broadly speaking, it went up, up, equity market came down, and then again from this point on we're more or less, after putting that bottom in September, wasn't September, in fact it was back end of December, where the dollar index then made a rally and equity market has been rallying. So really speaking, from here we've been seeing equity market and dollar index both going up. So the question now arises is what should happen. And as you've seen, most of the time we see equity market go up and dollar come down, and there are shorter period of time or smaller sections of time when they both seem to apparently do the same thing, and then they will revert back to their normal relationship. So here we are really not in a normal pattern, we are in an unusual pattern with the dollar going up and equity going up. So how long it will continue to do that, and once it snaps back, what will it do? Will, for example, dollar run up and equity start coming down? Is that what we would see? You know, could we see a situation where, for example, we find equity market comes down from here and dollar index break out of this downtrend line and just shoot up? You know, is that possible? Or are we going to see the reverse? Are we going to see a situation where, for example, equity market might correct a little bit and then just simply take off, and the dollar index comes down? So in other words, let me just change the color of those arrows. So are we going to have a situation where, for example, here we find both moving together, then we find equity start coming down, dollar start coming down for a small period, in other words still doing same together, and then dollar just continue down and equity then revert back up? So from general level terms, we see, for example, across here we've had a possible resistance in the past, resistance, so now we could find possible support in that area. And what dollar could do is dollar could come down, and then although dollar should have a support here in that area, but instead of strongly bouncing from there and reverting back to the upside, it may simply just make a small bounce and then just continue straight down. So it could possibly here do a little bounce and then just continue down like that, and during that time the equity market could just continue up. So they will then begin to start doing the normal thing, that is equity market going up, dollar coming down, and whenever the equity market retraces, dollar will retrace. So out of the two, this is two possible scenarios, is that either we would see both of them come down, you know, because the equity market is currently correcting, so how far it will correct We will try and see in a detail in a moment, but we could find a situation where both of them correct together, and then both of them will continue going up higher. Or we could find that the equity market just continues down all the way and this dollar takes off. So that's the second situation. The third would be is that equity market comes down as a retracement and then continues higher. The dollar comes down with it, but only for a part, and then dollar begins to continue going down and the equity market then goes up. So it is unfortunate that at the moment when we are trying to get a handle, we've not got much by way of looking at the normal correlation. The normal correlation between equity and dollar is the inverse, not exactly 100%, but is very high negative correlation. So at the moment we seem to be almost on our own trying to find out what is happening here. Now when we look at the equity, then it is possible the equity market could actually correct. However, if you look at this daily chart with an RSI, then you can see on an RSI we have higher high and higher low, and even this high is higher than the previous one. So that would suggest that the current correction we've had might only be just very minor correction, and we should see another high on the price, at least anyway, and then the RSI could try and go up but might fail, and in which situation it would then actually give us a possible divergence, which means that then after the new high we would find the equity market would come down back to the rising trend line support, and in the same time we'll also try and note that the dollar index is almost ready to at least make a correction. Even if it doesn't sort of come all the way down to here, it is ready to make a partial correction before going up. Okay, so that's a concept we are coming back when we are looking at the equity market and dollar index. So we'll look at both of them in bit more detail and see if we can glean which way things are going. Okay, so we will go back to looking at first of all the Dow Jones Industrial 30. And the Dow Jones Industrial 30, we've noted before that we had a low here back in November, and we had a wave 1 up, which I've put in a Roman numeral parenthesis 1, then Roman numeral in bracket 2, and then I think this up to here was a Roman numeral 3 with a minor 1, minor 2, minor 3, minor 4 and minor 5. Okay, then we were looking for this ABC retracement, and it was only going to be a small retracement. Now at the moment I'm not sure if the small retracement we were expecting is finished, or are we still in a part of it. So if I now just go into the 4-hour chart and we're really looking at it from here, so I'll put a vertical line from there, so when I go into the smaller time frame I don't get lost. Okay, so from here you see what appears to be the case from there is that we've got possibly minor 1, minor 2, then maybe right up till here is probably part of wave 3, I think, and then what we've had is this one has moved sideways, and this 4 that I put in is also going to move sideways. Okay, so the reason why is because if this is minor 1, minor 2, then this is minor 3, and then since then all this here I think is possibly minor 4. So I would label that here like minor 4. And in terms of the price action, we've got possible triangle formation. So we've had, for example, over here, so over here we've got actually, because of these labels, I can't apply the same labels here because we've already got 3 here. Okay, so we've got 4. So if you can imagine what I'll do is I will put in I will put in just a line to indicate. Okay, so this here is minor 1. Okay, then we've got minor 3 up to there, like that, and then this here is minor 4, and this kind of A, B, C kind of 4, and now we are going back in to complete that leg up. So how far will that leg go? We can't be too sure other than the previous projection we applied, and we will zoom out in a moment, so hopefully some of these things will make sense. Okay, so we are in this final leg up, and as I say, we will also get divergence clearly between this wave 3 and wave 5 of this cycle degree wave 3 in parentheses. So once we've done wave 3 in parentheses, we would then come back to the baseline to wave 4, and then we would continue higher. So that would suggest that there is possibly quite a bit of room for the equity index to go up. Okay, something like that. So there's quite a bit of room for equity index to go up. We would then complete this wave 1 in bracket, wave 2 in bracket, wave 3 in bracket, which we are currently in a progress of almost completing, pull back for wave 4 in bracket, and then we will have one final leg up. Now that is not necessarily guaranteed, but it is looking to me as most likely development. So on the daily chart then, if we just zoom out a little bit, so we will finish up with, see this leg here equal to that leg, AB equals CD. So I'm expecting equity market to probably continue grinding higher up until it gets to almost like 15,000. So that from the current level, it means another 400 to 500 points, almost 15,000, because one reason is that it has this AB equals CD projecting to that, and I have also got a secondary projection, and that secondary projection comes in from this leg up here. So this is from the low of 2009. If I measure that leg and apply it from there, sorry, not that one, it is, yeah, sorry, that green line we see, that green line is actually just projection of this leg up to there. Okay, but also if I was to project this one, which is 100 point there, so let me just do 1.272. oh, 1.272. Okay, that is in fact quite a lot higher. Yeah, that one is quite a lot higher. So that one is quite a lot higher, but just projecting this AB equals CD is currently giving me that this AB equals CD is currently giving me the level I just identified here, which is around almost around 15,000. And I don't think that we will actually get a serious sell-off until we get there. So in terms of the daily chart now, we've got a divergence between this one, which is wave 3 of this cycle degree wave 3. We got wave 3 of 3, 4 of 3, and we are now going into 5 of 3. Okay, so we've got minor divergence there. Now the final divergence will be between the wave 3 or 5 in that cycle degree. 3 or 5, 4 or 5 down, and we are now going for 5 or 5. So in that case we would get this one going back there like that, and then finding that it does a divergence again. Okay, so if we just, in fact, let me just delete that. So if we just pull that across, then we'll find that the RSI would try and go up but won't be able to keep up with the price. So that is where we will get a little bit deeper retracement. So equity market from this perception looks like it is going to continue grinding higher, maybe not in a big massive way, but as you can see, it's got a bit more to go up, then a little bit pull back, and then it's got another leg up. So eventually it will get to about 15,000, and whilst we remain above this rising trend line at the bottom, then we are currently in this cycle where we've got 5 waves. So we've started from here, and we got wave 1, wave 2, wave 3, pull back to 4, and then final one 5. So while we remain above this, and I'm going to make that one a little bit thicker color, thicker line like that. So as long as we remain above that, then we are still within that cycle degree which started over here. So my personal view would be then is that leading into early next week we might still continue higher, and then possibly do a retracement back towards the back end of the week maybe. And if we don't, then this final leg up we are talking about can be also quite strong, and it might just simply continue to go higher. We might not even retrace at all, because this wave 3 might not finish, because this last final part of that wave 3 might still continue higher. So either we'll have a situation where early part of the week will go up and then come back toward the back end of the week, or we will just continue higher whole week. Okay, so that's one possible conclusion I can reach on dollar index, on Dow Jones Industrial 30. If I now look at the oil, then oil, as we know, has come down in A, B, C down. And if you look at this slightly larger time frame, which is the daily chart, then on the oil I've been thinking, in fact let me just go back a bit. Okay, so on the oil we've had this low major sell-off, as we know, back in 2008. Then we bottomed out and we had this W, X and Y. That's 2 legs to the upside. So WXY or ABC gives me wave A. Okay, and the reason why I put this X is because normally when I look at it here, see, this is the high here. So normally we would expect a corrective wave, so it would be like A, B and C, but in this particular case I can't see that normal wave. So either it is wave A, B and C, or W, X and Y. It doesn't really matter. It's simply saying that in this leg we got a zigzag. Okay, so that's basically what we are saying. In that leg we got zigzag. Then since then I think we are correcting. I don't think we are in a completely new downtrend, because as we noted that the equity market is not going to come down strongly just yet. So far when I look at this RSI, you can see, for example, that in here the highest RSI is on that reading. So the reason why I think that is so is because we are contracting in a triangle, and we can count this triangle in a couple of ways. One would be is that this ABC gives us one zigzag, then we are in a wave B. So this one would be larger A, we are coming down in a larger B, and in which case this would be a triangular, would be wave A, B, C, D and E, in which case oil will need to come back down. Okay, so maybe it won't do that immediately, but what it might do is that currently it's bouncing, so it'll probably go back toward this falling trend line, and then it would drop to this rising trend line support to complete this wave E, which is when we will finish this wave B. So we'll have wave A, which is double zigzag, wave B as a kind of a triangle, and then we will go up. Because here we had a double zigzag, so I expect over here we'll get double zigzag too. So we'll get something like this: wave A, wave B, and wave C, with eventually topping out around 120. I think we will certainly, in that case, I wouldn't say certainly, but we could quite easily go back and retest this high, or make another minor higher high around 120 before oil is ready to come down. So for the time being, and in fact it could even go higher, because you see, if I was to put this from the low, if I was to put this A equals AB equals CD, then that is projecting to like 123. So it's quite possible that we might even go there, or we might go higher. We might actually finish up probably more like 130, 125 to 130 maybe even. Okay, and then along the RSI of this drop, we might get something like we got 61 already. 0.786. Yeah, you see, we could even go back to 78% retracement, or maybe even 88% retracement. That is possible. And the reason behind it is that if the equity market continue to go higher, then it is possible that that would be a sign of strong economy of some sort. When I say strong, certainly in comparison to the recent historical past, we may find that the equity market will be in good shape. So they would be saying it's recovering, and in that particular case, there would be more demand for oil in presumably growing or improving economy. So my feeling is that we would get AB equals CD projecting to 120, 130, 125 to maybe even up to 120, 125 to maybe 130. Okay, we would do that before we finally give up, and then we find that we are ready to start correcting oil in a fairly big way, and that would take a while. It's not going to be over within next few months. So I think that, broadly speaking, I have a feeling, based on this chart here and based on what we are looking at on the equity front, that we may well find that they are going to continue to grind higher. So if that particular reasoning is correct, then on our previous chart, which is over here, sorry, we were trying to find out on here, we were trying to find out that if the equity market continues grinding higher and the dollar and equity market goes back into normal relationship, then maybe the dollar will continue to decline. It cannot keep doing this indefinitely, because in the past you'll see that it did that only for a short period, like fairly short period, where it did the same thing as what the equity was doing. So we should find that they drop back to the normal relationship. Okay, so oil in the shorter term, I think the oil has every opportunity to go back up to retest this falling red trend line, and then possibly decline. Might not even decline this far. That's the other thing to remember. It might not even come down as much as this. It might, for example, just continue making higher high and higher low, in which case we've not got the triangle, but then we have a slightly different scenario. What we have then is we had this one here as an ABC retracement, and we are now looking to go up. So in that particular case, we had a wave A, then we got this as an A, B, C, D and E. So in that case, this minor triangle actually finished over here, and in which case the oil is now in a new uptrend. So we may find then that it goes through this falling trend line, and oil would simply just continue going higher like so. Okay, so we'll have to wait and see exactly what it does. Make that a brown color, so it will just simply continue higher. So if it did that, then it means that the equity market will also continue higher fairly strongly, and the dollar is most likely to then come down. Okay, so looking at that and reasoning it out, I would seem to get the idea that the equities and oil will remain relatively strong, even though we might expect some retracement, and we may not get this oil falling as far as I'm saying back this trend line here to 81 area, but it is more likely to simply continue higher up, because this one here, it appears like it done wave A, wave A, wave, sorry, over here wave, it has done already wave A, wave B, wave C, D, sorry, I've got muddle up. Okay, I've got muddle up. Okay, let me, so we've had this ABC as a wave B, so wave, larger wave A, larger wave B. Now then we're starting up, in which case we've got wave A, then got A, B, C, D, E to give us wave B, and then we will start off in a new leg, so that could continue higher. So let's monitor that, and let's see if our reasoning is correct, and if that is correct, then let's see how the dollar index might pan out. So this is the dollar index. Now the dollar index currently has been going up, and if you followed my previous recording or previous sessions, you will know that I have been explaining this particular pattern where we had this sharp sell-off, then we had ABC up to give us wave A, ABC down to give us wave B, and broadly speaking we're calling that like a flat, you know, in Elliott wave term they call that flat. And in the flat, because we had wave A as a ABC zigzag, wave B as a ABC zigzag, then it follows, the rule says that we would get a wave C, and wave C would have a 5 wave up, and it will be much stronger than either of these. And at the moment you can see, first of all, it does comply, it is much stronger. Okay, so that's first thing. The second thing is that it must have 5 waves. So whilst it has been quite difficult to fully label the 5 waves in there, however, I am making an attempt, and I have outlined that this one I'm calling this wave 1, then we had this ABC as a running flat within this channel, so that's a wave 2, and then over here is possibly wave 3. Okay, and you know, we may be slightly incorrect, but you know, at the moment I've got no other way of labeling this, so I'm labeling this as 1 and wave 2. Then I think we go minor 1, ABC is the minor 2, minor 3, minor 4 and minor 5, so that gave me wave 3. So we go wave 1, wave 2, wave 3, and then after that we seem to have gone in a real puzzlement, because you can see, broadly speaking, we've got really a side wave pattern. So what have we got in that? And that is quite puzzling. I would have thought that maybe we had this as a wave 3, then we had wave A to the downside, ABC to the upside, and then wave C to the downside. So we've got A, B and C like an expanding flat, because it expanded here. This wave B went beyond the origin of wave A, so it's called expanding flat. So in that case I would be saying this is wave 3 and this would be wave 4. So if this is wave 4, then what is all this here? And that I cannot explain. What is over this here? That I cannot explain. Because we are looking for wave 5. I even thought for a moment and maybe this is what it is. I've even thought for a moment that what we got is we got this wave 1. After this wave 4 finished here, we've got minor wave 1 here, minor ABC wave 2 back, and then over the weekend when we opened we had this gap up, so wave 3, then we had this triangle for wave 4, and this being wave 5. So if that's the case, then quite possibly we've got this one complete. And although the wave 5 should have gone higher, because normally you expect the wave 5 to go higher, but I think we can probably say this was a truncated wave. In other words, it didn't go to the full extent. So if that is a truncated wave, then quite possibly we have finished this cycle completely. So in which case the dollar has already topped. Okay, so dollar has already topped, and if it is already topped, then we are in a new cycle to the downside. And to confirm that, on hourly chart, if this is top, then I'm just trying to think here, if this is top, then possibly what we got in this case here is we've got wave 1 down, wave 2 which is a very deep retracement, so if this is wave 5, then we've got the price pattern is not very clear, but this might be wave 1, this might be wave 2, then maybe over here we've got wave 3, 4 and 5, but it's not ideal. Okay, because it's not ideal, because on this one, if this is 1, this is 2, then over here we are struggling to put a full 5 wave count in place. So we might have wave 1, wave 2, then we go 1, 2, 1, 2, 1, 2, 3, 4 and 5. So that would give us 1, 2 and 1, 1, 1, 2, 3, 4 and 5, so up to here. So 1, 2, 3, 4 and 5. So that only gives us 1, 2 and 3. So then where is a 4? If we do it this way, then we go 1, 2, and then we got 1, 1, 2, 3, 4 and 5. So maybe what we have here is 1 and 1 and 2. Then we got 1, 2, 3, 4 and 5. You know, it's not very clear. I'm not entirely happy with labeling that 1, 2, because we're struggling in this area. So the second scenario was, which is what I was trying to contemplate, is that we've got some very complex count here, and maybe we are going to get another high to complete this cycle to the upside. So in that case, what we might have is what I've said is wave 3, might be 3, or maybe wave 3 further up here, and this would be 4 and then one final up. But the problem I'm having with this is because normally, so when you put this channel up, if the wave breaks through that channel to the downside, then generally in terms of the normal technical analysis, we would say that that particular trend has changed to the downside. That means all the 5 waves you're talking about is already complete. So from that perspective, I think the dollar has already topped. However, I am not able to fully reconcile what is happening over here. So what I'm thinking of is if this was minor 1, minor 2, minor 3, then this triangle is a minor 4, and this is a 5, then really this one cannot be anything else but the major trend to the downside. So if we say this is 1, this is 2, this has 3, retracement 4, and then 5, you see, because in there, see, when you get a bar like this one, it hides something in there and it's difficult to tell. If you look at the RSI, then based on the RSI, see, we had a high here, then go 1, 2, possibly 3, 4 and 5. So 1, 2, 3, 4 and 5. Yeah, I'm not certain, and I can't actually work out the waves very clearly here. So we will have to try and wait for some further price action to actually confirm something for us. But the fact that we have fallen below the trend line, marginal breach are okay, but we can't expect a serious breach, which means, you know, a fairly deep, you know, like prices coming right down here, for example, and then going back up. We can't expect that. So we may have to keep our minds open that this part here is something we don't fully understand. So although we think that this might be 3, A, B, C as the expanded flat wave, 4, this should be 5, but maybe it's a complex wave and we are probably still in wave 4, and in which case this 4, once it's finished, we will still get one more thrust up, but not a huge one, one more thrust up before we start coming down. So we'll have to keep our wits about us. We'll have to keep our, you know, minds open for that period to see exactly what happens. If the dollar index falls below this pivot here, then I think we have already finished this to the upside. We've got a top in place and we are now on our way to the downside somehow. Okay, we'll have to work out the waves later on, but then we already have a top in and we are now on a new downtrend, or this is the big sideways correction and we should then see one more final thrust up. Okay, so we'll not pay too much attention to the actual wave count on here, but just follow the normal technical that we have nearly 5 wave complete. That's one. We have also, of this decline, we've got 78% retracement coming into that area. We have this downtrend line coming into the same area too, and we also got few of the Fibonacci projection confluence coming in. On the daily chart, we have a serious divergence on the RSI, so everything is pointing to perhaps a top already in or will be in on the next thrust up, and we will soon know. Okay, so let's now, so possibly we are expecting sideways to maybe one more thrust up, or simply a breakdown in dollar index. So let me quickly go through the dollar index, US dollar pairs now. So on the US dollar pairs, the first one we are looking at is the dollar Swissy. Now, like the dollar index, the dollar Swissy has already also finished this rising trend line or trend channel. Okay, now in here it has been difficult to label them in a sense of a normal 1, 2, 3, 4 and 5. So I think what we've got coming up is we've got this as a wave A somehow. So I'm going to put that one wave A there. or wave W, then we got ABC as the wave X, then we've got this ending diagonal. Okay, so maybe the correct way would be is this one as a small a, and then this X here as a small b, and then this like an ending diagonal as a small c. Okay, so that would be wave C, and in which case we've got small a, small b and small c. That gives us wave A of a larger degree. So I've indicated that in A in bracket, and we've got B in bracket. Then again we're going up, and in which case we've got W, X, Y, X, Z. Okay, so effectively what we've got is wave A, wave B, and this one finishing up as wave C. That one finishing up as wave C, and maybe C over here. We get 1, 2, 3, 4, and 5. Yeah, so this is why I had this W. So okay, just assume that ABC zigzag gives us either an A or a W. Then we go to B here, and then we should have basically, because here we had a zigzag A, B, and C, so we should have basically A, B, and C in this one. So maybe this W, X, and then Y to complete. So and Y would be 1, 2, 3, 4, and 5, and this 5 is possibly like an expanding ending diagonal. So in this particular case we got A, B, C to give us A, B, and then again we've basically got A, B, and C. Okay, so basically double zigzag is finished, and we've started coming down. So if we look at the way it has come down, to see if that one shows us that possibly it's a new leg to the downside or not. You see here, so far it looks like it's A, B, and C, really speaking. A, B, and C. Doesn't look like it's a 5 wave. So this C we're looking at, isn't it? So in there, see, that's 1, this is 2, this one could be 3 and 4. Okay, maybe what we got is we got this as the 1, so this one could be, and I'm not absolutely sure, but possibility is that this one could be minor 1, and then this one here is a minor 2 somewhere here, then this one could be minor 3, and then what we got here is a triangle like so. So that could be minor 4, and then this last little thrust is a minor 5, very small, and is actually then becomes a truncated wave. In other words, it doesn't go past the wave 3, so it's truncated wave. And if that's the case, then quite possibly we've got this 5 wave down, then we had wave A, wave B, and wave C to the upside. So in which case we are not going to get any more higher prices. Then quite possibly this one is a wave 2. So this 5 wave up here gives us wave 1. Then we've got ABC back up to give us wave 2, and that ABC back up to give us wave 2 would probably be up to there. Up to here, I think, somehow. So that would mean we've got possibly like a so what we have here is possibly some kind of a leading diagonal like that, maybe. So that gives us wave A, then we got wave A somewhere here, then we got wave A, B and C to give us first zigzag, A, B, C back to give us wave B, and then wave C up there somewhere. So as I say, not very clear, but most likely if that's the case, then this is 1, this one is 2, and in which case we should see wave 3 developing here. This one is wave 3. So if this is wave 3, then we will see it break below this next week, early next week, in which case this area where previously we had a lot of resistance became support, and became support again, is likely to fall, and in which case we are likely to drop down here. We are likely to drop down there. That wave 3 will be quite strong, and that would then definitely indicate that the dollar Swissy has finished going to the upside and is now back into the downside, and in which case that would also strongly suggest that the dollar index itself is also in the new downtrend and is broken. It's actually completed the move to the upside. Okay, so I seem to get the idea that perhaps the dollar index has topped and US dollar Swissy has also topped. If not, then we may be in a complex sideways correction and we will see one more drive up before we are ready to come down. But the fact we've come out of this rising trend channel, to me, seem to suggest that we've probably seen the upside, unless of course all of this combination give us wave A somewhere here, then we get possibly like a, or up to here wave A, then we get A, B and C, and then we have another rally to the upside. Okay, then, but it would get very complex in doing that, and I'm not really too keen or eager to anticipate that. So we'll have to wait and see if next week if we see a strong move to the downside, then and take out these pivots, then I think we are talking about serious new trend to the downside. Otherwise, there may be an opportunity. We may not even come down. We may have an opportunity of dollar index maybe making another run to the upside to finish this ABC zigzag, ABC back, and then a short leg up to complete the upside. Okay, so that's a dollar Swissy. The next one we are looking at is Aussie dollar. Now in the Aussie dollar, if the dollar index tops out, then the Aussie dollar will probably start making room to the upside, but somewhat undecided on that at the moment. Aussie dollar is not part of the dollar index, but nevertheless, if we see this decline, then AB equals CD is expected to come down to this rising trend line support. That's one. The second thing is that longer term we are still within this triangle, and if the triangle is likely to play out, then quite possibly we expect this one to come down back here. If this one came down back here, then that would suggest the dollar has to be relatively strong against the Aussie dollar. But I'm not sure if in fact that will be the case. So somewhat undecided really about what's going to happen. And there was two scenarios for quite some time I've been playing at, as some of you will know, is that if we are in a triangle, we need that one to come down to here. And if we're not in a triangle, then maybe we've already finished the congestion and we are now in a new uptrend. And in which case, what we had here is the first leg up. Then we had this A, B and C as like a flat correction, and we are now in a new uptrend. In which case the Aussie dollar is already in a new uptrend. I don't like to think that we are, but it is possible. And if that's the case, then as the dollar index come down from that support level I suggested, Aussie dollar could take off to the upside. So that's a possibility. So really this is why market is quite mixed at the moment and not very clear. But in order for Aussie dollar, if it breaks above this potential falling trend line, then I think we are in a new uptrend move and we will be moving up quite strongly and sustainably, and in which case the dollar index is definitely on the way down, quite, you know, in big new downtrend being developed, and we are at the very early stage of that. So I think next week is going to be key as to what happens in terms of actual new trend being developed. Okay, so Aussie dollar looks like might be on the new uptrend, or it may actually continue decline to the bottom of the rising trend line to complete this triangle. So the two possibilities for Aussie dollar. If you look at a New Zealand dollar, also has a similar possibility that either it drops down and then goes up to give us an appearance that is some kind of a triangle, or the Aussie dollar will, New Zealand dollar will simply continue straight down. Longer term, I have explained before, whereby we've gone up in ABC here, so we expect some retracement of the entire move up from the low of 2000, or we might simply congest in this triangle. So this then becomes a wave B, wave A, triangle, wave B, and then going up. So even New Zealand dollar could do the same as Aussie dollar, is simply from here is gather enough momentum and simply take off. Like, you know, we've already completed the correction, and see today New Zealand dollar was strong to the upside, so maybe it can continue straight up. So that would suggest that, you know, dollar index is definitely in a downtrend, and we would see some major moves in a lot of these currencies. And I think really next week is a very, very key. It will also be, next week will also be end of the quarter. So in end of the quarter, often many new trends do develop at the end of the quarter. So that's a possibility. So I would suspect that next week we will be looking for confirmation of a direction, both in Aussie dollar, New Zealand dollar, and indeed dollar index. Then we look at the US dollar yen. Now the US dollar yen, since the low here, we had wave 1, wave 2, then all of this up to here is a part of wave 3, which was wave 1 bracket, wave 2 bracket, wave 3 bracket, wave 4, wave 5. So that gave us a wave 3. 1, 2, 3. We came down for 4, and either we finished the 5 now, or we are still in a process. If we look at it now on a 4-hour chart, then you see from here we probably got wave 1, wave 2, and then I think that this high is the wave 3, wave 1, wave 2, this one is a 3, then we are probably in wave 4. Either the wave 4 finished here, or possibly like ABC, wave A, ABC back, wave B, and we are now doing wave C, and we should then basically start running up from here. That one goes over there. Okay. Then once we finish that, then that would complete this larger wave 3 before we get a deeper retracement. Okay, so US dollar yen might make an attempt to the upside. See, this one is ABC definitely, because see, this wave is gone too far back into it, so it's not like a 1, 2, 3, 4 and 5 kind of a thing, but it's definitely like ABC, larger wave A, ABC back, larger wave B, and we are now doing wave C. So this one I do expect the dollar index, these US dollar yen, to drop back to the rising trendline support, and then possibly start, and in that case you can see on the RSI it's beginning to curl up. So I think we are there. Okay, so US dollar yen, I think we will probably continue higher, and most likely, depending how much we go up from here, but I think we could quite easily probably test this 98 level, or maybe even a little higher, and we could even go up to 100. You know, that's a possibility, up to 100. So if you were looking for trading this one, then I think next week there could be an opportunity to go long, providing we get this support here holding. Then we may be on our way up for that final leg up. So that's the US dollar yen, and we'll go over quickly now to the Canadian pair. And we said the US dollar Swiss has stopped possibly. Looking at Canadian also has come back to quite deeply, 88% retracement of this last drop, and it's gone wave A, wave B, and we are in a wave C where we got 1, 2, 3, this 4, and dollar Canada looks like it's going to run to the upside if the wave counts are correct. If the wave counts are not correct, then here we had W, X and Y to give us wave A, B, C back to give us wave B, and then I would have thought that we've got wave A, wave B and wave C. So in which case this pair has stopped as well. But if we look at a shorter term, then again, if we should see, this one down is ABC, then we got up is ABC. So really speaking, this cannot be assumed as a new downtrend, because this first drop down is wave ABC. Even if we assume that we've had a truncated wave to the upside and we've started here, but then you see, look, 1, 2, then you got 1, 2, 3, 4, so it's overlapping. So I think what we got is we've got this wave A, wave A, then got wave A, B, C. So if this is wave A, then got A, B and C wave B, then this is part of wave C. But this is getting complex. So I say if I was to do this one, then possibly what we got, which, and again I'm not very happy with it, but possibly what we've got is we've got, if it's top and it topped over here, which I don't think so. If it topped over here, then we got this as a possibly expanding leading diagonal. Otherwise we may have wave ABC as wave A, then you got small a, small b and small c. So wave A, wave B, and we are now in a wave C, which is an expanding diagonal, ending diagonal. Okay, so this could be a 1, 2, 3, 4 and 5 to the downside, or we might have ABC as A, ABC back as wave B, then you got this one looks like 5 wave, so it looks more like A, B and C. ABC, ABC back, ABC. Not clear really. It is not clear. So I'm thinking if the E waves are not correct, then possibly we go 1, 2, 3, 4 and 5 new leg to come up. Otherwise we have top, but I don't like this so much overlapping on this one, just like on dollar Swiss and so forth. That is a new trend. So I'm still expecting basically for a high to be retested before we are coming down on dollar Canada. We might get something similar for dollar Swiss in that case. Okay, so we look at the pound. Pound dollar has finished the downside. I think it's already bottomed, and then as I've explained previously, we've got -1, -2, -3, -4, -5. So that could be a wave 1 or an A, ABC back as a wave 2 or a B, and then in a shorter term, so you got 1, 2, 3, 4, and then this ending diagonal is wave 5. So maybe the pound dollar has actually completed a 5 wave to the upside. We expect now ABC retracement and then continue higher. Okay, so next week I think that suggests maybe Monday dollar index could remain strong. That would cause pound to pull back. That would also cause other US dollar pairs to weaken in the early part of the week, and then dollar will continue to weaken and the other currency will start gaining against the dollar. So for a pound, ideally you need a retracement back to this level around 151 in order to go long. 151 or a little bit lower down at 150. 151 to 150. Possible area for going long for pound. And then we look at the euro. Now the euro also has been very difficult, but let me just try and explain, and then maybe I will have to cover this again in the separate video. But here, the first drop, I'm going to use the trend channel along with RSI. So we've got W, X, so we've got W, X and Y. Okay, so that finished the first zigzag. So W, X, Y, then I'm calling this as an X again, and a final leg down as Z. So we've got W, X, Y, X, Z. So gave me wave A in parenthesis or bracket, and then we've got wave B in bracket. Okay, so wave B in bracket. So this is wave A up to here, wave B. Then this one is part of wave C. So what I've got is we got A, B and C. So we got A, B and C up to here. So that ABC I think it gives me W. Then we've got A, B and C back here. So from there we've got A, B and C back here to give me wave X. Then we got A, B and C down to give me wave A. A, B and C down to give me wave A. Then we've gone back up for wave B or an X. Okay, wave B or an X. So we got ABC as a W, ABC back as a X. Then we got A, B and C, or in here we've got possibly like wave B. Then we've got this part coming up wave A, wave B and wave C. So that's also possible, in which case we've got wave W and wave X. So maybe from here we got A, B, C as a B, and then this one as a C. So W, X. So all of this from there to there, in fact, could be just running flat. I'm going to make that one dark green. Okay, so if you ignore the others, then A, B, C as a W, then we got wave A, then we got A, B and C as an expanded flat. So wave A, wave B, and then this coming up as a wave C. So that gave us a wave X, which was high of last week Friday. So then, because here we had ABC, so we now look for an ABC. So this as an A, ABC back as a B, and we should now be coming back down. And that coming back down next week could be ABC. So that suggests that maybe dollar will actually have another leg up based on that. Is euro would weaken probably almost down to 27 based on Fibonacci 2770 area somewhere. We could possibly weaken, and also whilst we remain below this trend line, see this trend line is finished. So we've got a secondary trend line which connects this high and this spike high to here. So as long as the price remains below that, we are still in a downtrend, and we expect a further weakness to possibly 2770 before we are ready for a new uptrend. That new uptrend would be following, as I say, these two potential pattern, is where we either have from here we have A, B and C, sorry, we have W, X, Y, X, and we'll see another leg up like that here. So we got W, X, Y, X, Z. That would be this one. Or we've got A, B and C, A, B and C to give us wave X, sorry, A, B and C to give us wave W, A, B and C. Well, okay, A, B and C, then we get X. So A, B and C, then we get X. Then we get another A, B and C to the upside, which would take us to much higher level. So once this is finished, basically what I'm saying is that once this is finished, we should have a leg up which takes the February high, or maybe even make a new higher high. Okay, so next week it is possible that early part of the week we could have a situation where dollar would gain, and in which case on that dollar index we may get another leg up. Maybe all of this is sideways correction, we should get another leg up. Okay, and maybe in that case also on the currencies like dollar Swiss, we might actually get another leg up, and same as dollar Canada. Okay, so and that also explains that on this pound we finished the 5-way above, we should get ABC retracement back down. So I think, you know, with all of this now, to summarize just quickly and then end it here, because I think we've gone on quite a bit, is that dollar will probably strengthen early part of the week, maybe the whole week dollar will continue strong. Euro will weaken, pound will pull back, and dollar Canada will go up, and then Aussie and New Zealand dollar will also pull back. Okay, so hopefully this will start making you ready, or help you to get ready for early part of the week. And I will then cover some of this material again and do a separate video for going through the Canadian and yen pairs or anything else that I see of interest. But maybe you might have to view this video few times in order to, unless of course you are, you know, right with me and following very well and are able to grasp what I'm saying to work out your own positions, in which case you don't need to view this again. But if you do need to, then I think view this again, because maybe it will help you prepare and explain what is likely to happen next week and why. Okay, and then hopefully we have been waiting for a while, but for quite some time, as you know, the price action has gone broadly sideways, and in that process we've not really had an opportunity to get proper swing trading done. But once this is finished, we are coming close to, you know, 128. It could even decline, it could even do 127, which is approximately 61.8% retracement on the euro. Will probably give us double bottom here before it starts going up. So, you know, maybe next week it might even turn out the whole week we could probably find euro dollar index going up, maybe strong, you know, equity strong, dollar index strong, and euro will really drop to the level that I just pointed out, 127.75, 128 definitely, maybe 127.75 or even 127 before going up. We've got a lot happening in the euro, Cyprus and etc. And I think, really speaking, there are no two ways about it. No matter what kind of agreement they come up with, the very fact that they have played about with people's confidence mean that the moment the bank doors are open, people are likely to start looking for ways of extracting money. Now there is a talk about them putting control, capital control, in which case they will be somewhat limited, but they will I suspect that would really knock people's confidence, and euro will probably be weak, in which case the dollar index will be strong. So to summarize, I think the dollar index is likely to be strong early part of the week or whole week. It will continue in steps with the with the Dow Jones Industrial Equity Index and oil, and all the US dollar pairs will weaken against the US dollar in some degree, and maybe by Friday we will see a possible bottom forming on euro and on other currency pairs, and dollar then putting a final top. So thank you. Hopefully this will assist you. Any questions on this one, please feel free to email me or Skype me, and then over the weekend, as time permit, I will try and do a separate video to go through the other currency pairs. So then hopefully you will be working out your positions on which particular trade you'll be looking for to consider for a swing trade, and I think we are close. We are getting, next week will probably provide us with an opportunity to go in for a swing trade, which will hopefully last us for quite a while, you know. Okay, so thank you for joining me. I do appreciate that, and I look forward to you joining me again next week early on a Monday, and hearing from you with any questions or comments in the meantime.